Aloha everyone, Joshua Hayes at BigWaveTrading.com. There is a lot to go over because there's a lot happening in the overall market. Right now, following today's session, tell you what, that's some terrible jobs numbers. Jobs data has been ugly, the last three jobs reports, but is the US stock market really the US economy? I say not so much. The stock market seems to be anticipating rate cuts, is more welcoming to rate cuts. So I actually saw a lot of rotation out there, but I will mention the indices. The SPY kind of looks like a stall session, churn session, a squatting session with the heavier volume. But that being said, it's still a strong uptrend. If we go to the weekly time frame, remember, price is all that I care about. Everything else is secondary, tertiary, but still it helps us kind of follow the path. We're still triple green here. Now we do have three. The trend momentum, which is basically the momentum indicator, has now printed 3 bars of slowing action, indicating that we could pull back. But let's see if I have the line on this one. Yep, I can't see us pulling back really much further than 613 on the SPY, which would line up with the 21 EMA. I don't see us making down to 50 SMA. I only see a 3 to 5% pullback. I don't see a cyclical or a secular bear market. And one of the main reasons for that is that sentiment is just so stretched right now. And if we just look at this weekly chart, if we look at the QQQ, same thing. We're showing that momentum is slowing the past 3 weeks, but we're still triple green here. And it's clear the IWM, even though the momentum has been slowing the last 2 weeks, there's clear rotation here. And we're also triple green on these indicators. So while the SPY and the QQQ kind of looks like today might have been stalling, churning action whatsoever on a heavier volume, the IWM still looks fine. The DIA also has that churning action. But like I said, the IWM looks fine. And if we look at the XBI, biotechs, that is a super bullish chart. And the way that I recommend playing biotechs, LabU. And the same thing can be said with home builders. That is a very bullish looking chart. You can play Nail, the 3X version. I can't get anything remotely ready for an entry, but RKT is also another stock that I'm looking at this, one of the leaders that I'm seeing from this industry group, and it just looks great. It just looks strong. And then there's also solar stocks. These are interest rate sensitive stocks. This ETF looks fantastic. So with this rotation and this jobs number, I would have expected a much worse session overall for the SPY. And the QQQ, you can see it barely closed lower, 0.05%. But the IWM being green is not something that you normally see on such a bad jobs data. Normally, you would end up seeing probably a 1% down day, possibly a close near the lows going into the weekend. Why did that not happen? Because sentiment is just so bearish. I don't know if anybody watching this video lesson looked at the AAII survey, but if my memory serves me right, bears increased to like 43% and bulls decreased to like 32%. So there's more bears than bulls, yet here you are just a stone throws away from all-time highs. On top of that, the NAAIM exposure index was almost at 100, which is a pretty reliable sentiment indicator for like picking tops short term or intermediate term in the market. That has now come down 2 weeks in a row from 98 to 92 to 82 in the most recent week. So there just is no fear there either. And then if you want to think about the Investors Intelligence Survey, it shows like 55% bulls to 18% bears, but still, I don't start looking for a top on that one till the bulls hit 60% plus. So we're still below that. So we're not too bullish there either. So I think because of sentiment being the way it is, and with the market welcoming interest rates, the economy hasn't slowed or crawled to a point that it's bearish yet. It could be, but it's not yet. And I just think with sentiment being so bearish already, how far down can you go? So I'm thinking 3 to 5% pullback. If we do get a pullback, that's the most we're going to see. But this has been a very tricky time. I'm not going to lie. I've botched a lot of trades. A-Lab back here, told all the members here, should be going long, should be all in A-Lab. Because right now, every trade I take, I'm all in. Now, if I get 2 signals per day, then I'm all in, all buying power in those two signals. It gets split up evenly 50%. If there's three signals, which there has not been for months per day, it would just be split up 33% each. But right now, A-Lab on this day, and this is the top stock in the market, 95% gain from that signal. I didn't take it, had that big gap up day, and then on earnings day, went higher. And I didn't take it because of earnings. It was a little bit over 2 weeks away. I thought that was too soon. Big mistake there. So there's A-Lab. GFI showed up in this weekly squeeze scan, and as you can see, there's only two stocks in it right now. FINMY. You can see what this looks like, and I think that that's basically like DRS in a way. I'm not too sure though. I can't find any information on this company. FINY is in the scan, and then Bros was in the scan, but today pretty nasty price bar. I was actually looking for a handle, and if I had any buying power, do a buy stop above this high. But pretty nasty reversal today. But that being said, these are the only two stocks. This scans for every stock in the stock market. And I didn't know this, but right now there's over 23,000 stocks that this scan can scan for. There's only two names in it, Bros and FINY. But whenever GFI showed up in the scan, I didn't take it. And I think it showed up in this scan on this day here, some like here or here. Finally, I got my pocket pivot point signal, gapped up on me, missed a trade, nothing I can do. XPEV also showed up in this scan, but it had earnings. Finally got my signal here, but it gapped up, no fill. Should have just gone at the market because of how it's a Chinese stock, so there's a lot of gaps. But that would have been a very good short-term game. Of course, now not doing so well. And then, of course, there was App. Tried to get it off the 9 EMA a little too early. Then I got my perfect setup off the 21 EMA. Didn't take it, and it's now running. RKLB did the similar situation, but unfortunately with this one, I would have played RKLX. So let's look at this one. It's now pulling back, but still, that's a miss of a near 50% gain. And then, of course, Roblox gapped up on me right here. This was the signal. Gapped up, did not fill here. And on this day, I had the trade paused, and then no fill. So it hasn't been smooth sailing. But that being said, despite the not being smooth sailing, last quarter, our quarterly portfolio beat the S&P 500. And surprisingly enough, this quarter, thanks to one stock today, the quarterly portfolio, as updated by Dusty at the close, is up 3.5% versus the S&P 500's 1.2%. So it's been a weird month, but at the same time, it's been pretty good. And I got to take profits on the swing trade at the market at the open on Monday. I'll be selling 10% of SOUX based on the SOUN setup. This was the trigger date right here. It's been working ever since triggering in. And then also ELTX. ELTX was an original long signal here, never triggered and filled, but never failed its setup. And on the antiquated archaic version of Telechart, it kept its green bop the entire pullback. So on this day, I moved the buy stop down to above this high, and after today's session, it's only up 7%. But you know what? Never look a gift horse in the mouth in this market. I'll go ahead and take 10% profits on that one. Now we do have one full sell signal on an end of day basis. AGX was a new long position back here. At the close today, it's down. Well, that's a little off. I guess it's not. So we got about a 6% loss there on this trade. But AGX knocked me completely out intraday on this session right here. Whenever it closed below this low here, that's whenever I personally got knocked out of AGX. So it's just been a weird market overall, and that weirdness can then be seen in leaders. You have AVGO that looks like this versus an industry peer, NVIDIA, which looks like it might be rolling over. The verdict is still out, could easily find support here and then move higher, but still, AVGO versus NVIDIA. Then you have AMD, looks like that one's rolling over too, versus Micron, MU. Which is right? I don't know. Then you also have Tesla, looking good. I'm currently long Tesla via TSLL. You have Meta, which is looking good. Amazon, which is looking good. Google, which is looking great. Then you have Microsoft. Microsoft looks like it's rolling over. And then, is PLTR basing or is it about to roll over? Is Hood basing or about to roll over? So you just saw a bunch of leaders with a bunch of different looking charts. And that's what kind of makes this tape overall a little tricky. Now on my loose weekly squeeze scan, this is the tight squeeze scan, Oscar has entered the scan, OSCR. So I'll be watching this one for a setup, but I got to be honest with you guys, with this setup, I'm going to need a handle similar to Bros, and then if Bros breaks down, there's nothing I can do. But despite all of that, even though we had two new long positions on Thursday, both filled on Friday, which means I'm basically out of buying capital. I still have one new long position I want to take. And if I have enough buying power, which I'm going to probably end up doing this anyway, I'm going to go ahead and split my available buying power, what I have left, up between SYM, which is one of the new swing trade setups that I'm taking, and QUBT via QUBX as I'm looking for leverage now. Now, the original signal on QUBT was on this session here, or actually on this session right here, because it was a pocket pivot point signal. Right off the support lows, you can see this base, still very structurally sound, but we had two new long positions on Thursday that were extremely high quality, so I canceled the QUBX trade to move all of the buying power into those two names. They triggered and filled. However, after today, even though that there is a squat, I want to make sure I don't have after hours down on. Okay. Even though there was a squat, I want to call this one back on, but if I'm very limited for capital, I'm just going to do SYM. But if I would do QUBT via QUBX, my buy stop is 1 cent above the high of the day, 16.17, so 16.18, and I would be risking to this low or this low. I think this low is lower. Not quite sure. But either way, it's like splitting hairs. But that's how I'd be doing QUBX. And if it was a normal kind of market, where I wasn't all in on every trade, I'd be risking 1% of my entire account capital from buy stop to the final sell stop. So that will only be called on if I have more available buying power than what I think that I have. If I am as limited as I think I am, then just SYM. And what I have on SYM is a pocket pivot point signal. There's kind of a slingshot here. Now remember, price is all that matters. Structure of price is all that matters to me. SYM has solid, not the greatest earnings, but they did beat on the top and bottom line in the most recent quarter, has excellent revenue sales growth. So I really like SYM. It's robotics, a current theme that I like. But what I like most of all is it has a 28% short float, just like QUBT has a 24% short float. So my game plan with SYM, all available buying power in my swing account above the high, which is 48.33. So 48.34 will be my buy price, and then I'll be risking to 42.37. Like I said, if this was in such a hot market where we just never pull back, and if we ebbed and flowed normally, I would just risk 1R from the entry to the low. But SYM is the new long position for Monday's session. So that's all that I have this weekend. Kind of a crazy tape, a weird, wild tape. September seasonality is in full effect. But like I said, because the sentiment is so bearish on so many different indicators and sentiment gauges that I track, yeah, 3 to 5% pullback if we do pull back is all I can see. Now, if you look at how we trade historically in election year cycles, it's going to be, it says that we should be choppy for about the next year. We'll see if that happens. I'm pretty sure there's going to be a lot of leading stocks that do extremely well during that time.